Hello again. Thanks for joining me on this session. Today I have a very brilliant, beautiful, and an inspiration to me and to many that will be talking. We're having our gist today on legacy, what legacy means, and there are a lot of things that you're going to be learning from my friend and my mentor too. And she's my namesake, Adiola Munofi. Adiola, you're welcome. Thanks for joining me on this session.
Thank you so much, namesake. Pleasure to be here.
Thank you. Thanks so much. So, as we get started, I just want you to share a little about yourself. What inspired you to get into this industry, especially as a newcomer? Coming into Canada. So, what really was it that inspired you to join the industry?
Okay, so my name is Adela Monofi, also known as the Money Savvy Coach across my social media platforms. And honestly, I've always been a financial literacy enthusiast. I loved learning about money. Right from when I was a child, I would pick up books that had to do with finance on my dad's shelf, like Rich Dad Poor Dad, Richest Man in Babylon. I just really had like some attraction towards financial literacy. So that's how my interest in finance started initially. Right, but then on getting to Canada as a newcomer, being somebody who really loved um, investing. I had so many investments back home. They were giving me very good returns, right? So I had federal government bonds. I had money market funds. I had agri tech investments. These investments were giving me guaranteed returns, and these were good returns, like 18% guaranteed, 20% guarantee, and more. So imagine my shock when I came into Canada and I expected everything to be better because it's the abroad. And I took her proof of funds because I like to work for money, but I love it better when my money is working for me. I don't like seeing money idle. So I took my proof of funds to the bank to have it invested, hoping to get some really good returns in the short to medium term while we settle in and know what we're going to do with it. And then I get to the bank and explained what I wanted. And she said, "Oh, that's GIC." And I'm like, "Okay, so what's the rate?" And she said 0.65%. I was like, wait, hold up. What do you mean? Do you mean 6.5%? Even that is low. And she was like, no, it's 0.65. I'm like, less than 1%? Is that even considered investing? She said, well, that's the rate, interest rates are low. And this was like late 2019. And I'm like, wow, that was my own biggest culture shock as far as my experience in Canada as a newcomer. So that sent me like spiraling, like what exactly is going on here? Why would I give a lump sum to the bank and they would be giving me less than 1%? This doesn't make sense. So I said, you know what, I want to speak with your boss. She was like, oh, they're not going to give you anything better. That's the rate. And she gave me this pamphlet. And I'm like, for real? So that experience was actually what sparked the curiosity in me. Like, there
Mm.
has to be something else in this country that would give me good returns and have some added benefits. And that was when like my radars turned on. I started searching, I started listening to people, I started, asking questions. And many people had nothing to tell me other than what I've heard in the bank.
Mm.
Until I stumbled on this interesting wealth building tool that's actually two in one. That's life insurance on the one hand and then investments on the other hand. And
Mm.
I'm like, okay, this is something that can protect my family in case life is short, but can also help me to build wealth, which is what I was looking for. And I was seeing reasonable returns, although it wasn't guaranteed like the investment I was using back home because it relies on the market. But I was seeing like statements of people who have had their policies, and the numbers were not 0 point something percent. I was seeing 8%, 12%. I'm like, okay, we can start with this one. And that was how I got the plan for myself and, of course, for my family, including my kids. And then once I did that, I was like, I'm sure there are many people like me out there who have money sitting down in the bank, earning 0 to 3%, and who would value the kind of information. I mean, I know what it took me to stumble on this. This is not out
Mhm.
there, right?
Yeah.
It's not
Yeah.
just parrot speak. So, how would those people get this information? That was when my decision to actually begin a career, I decided that, okay, now I'm going to be the voice. I'm going to share this with people like me who are looking for how they could, protect their families and also build generational wealth and get good returns. And that was how my career in the
Thank you.
financial services space got started.
Thank you so much, Adiola. That's quite interesting and detailed. Now, people can hear and say, okay, oh, yeah, because Adiola has always been, like you mentioned, way back home, you've been money savvy, and so maybe it's so easy for you to um, make that decision. Now, how would you approach it for someone who doesn't even have an idea about, what this is about? That's first. Then, secondly, now linking it to your own story. I know that you were money and you have always been money savvy. How about your husband? How were you able to, did you have to cajole him? How did you have to convince him? Because that's some of the challenges that some people that I have, met. It's either, especially for us women, a lot of the time, research shows that when it comes to this thing about financial planning, especially long-term planning, it's like we leave it to the hands of our spouses. And so when it comes to taking some of these decisions, it's not to say that we are taking it outside of our husband, but how do we get spouses involved, especially for women who might just learn this, hear this now and say, okay, well, I'm interested, but they just find out that it's not something they'll be able to run on their own.
Okay, so for somebody who didn't have like, or who did not have the background of investing and stuff like that, I would say that almost everybody gets up in the morning because they have a goal to go make some money. Because money solves almost everything. You can't have
Absolutely.
electricity, you can't eat, you can't move, you can't do this if you don't have money,
Yes.
right? So money is always an important topic, and everybody has to have interest. There's nobody that can, you know, that can that can take care of your financial life except you are 100% invested in it. So this is something I tell people when they leave some things out and they just go with the flow. You can't build real wealth without being interested. So, as women, a lot of us also feel like, oh, money matters is for the men. And honestly, while we were back home in Nigeria, that could have worked because most of the men like to take all responsibilities while the women take care of the home front, taking care of the kids and stuff like that. As a woman, and especially when we're in this part of the world where you don't just leave everything and a lot of things are systemized and you just have to be on top of it, it's important to show interest in yourself, in this money matter yourself, understand it, because you're the caretaker, everything hangs on your head.
Mm.
So how I got my husband on board is, well, he's always known me to be somebody who was interested in money anyways, and so in that department, he actually leaves a lot of the decision making to me. And says, okay, have you gone through it? Is this, is that? Okay, whatever you say, it's fine by me. So it wasn't a problem actually getting him to come on board. It's all about showing him, oh, this is the benefit, right? And the fact that the plan I found catered for what if life is short and what if life is long was a no-brainer as far as he was concerned. Oh, God
Mm.
forbid anything happens to you, we are covered, all our assets are covered, and if anything happens to me, you are covered, the kids are taken care of and stuff like that. But if nothing happens, which is the cool part of things, we can draw out money from our life insurance policies, to live our best life, to travel the world, to buy a business, to buy an investment property. I mean, it was just all about showing him what the benefits are. And of course, it was on board, so it wasn't really that much of a problem. But for people whose husbands may not be that agreeable, I would say invite them and have the conversations together rather than going there and going back to reports that this is what they have said. There's no way you're going to say it that's going to sound exactly the way the professional said it to you. So invite them, since they're like the key decision makers. Let them be on the call, let them understand it, and know that you're protecting the entire family it's just about communicating properly and making sure that you guys are working together towards the goal.
Thank you so much. And in case, I mean, because of course family dynamics differ, and for some it might even be, I mean, the other way around. Whoever it is that is listening to this, just like Adiola has advised, it's always good for you, for the two of you to listen and hear from the experts, so that it helps to be able to take a decision. Because the truth is, I have come even with some men that will say that I don't need life insurance. What I mean, and even for some, it may not even be life insurance. It could be money thing, and they are just, once they are closed, they are closed. So, if you hear this and you're listening to this and you know that this is a benefit, please invite your spouse, so that, because at the end of the day, it is two. It makes the two of you, whatever happens in the long run, either you're retiring or God forbid anything happening, it's both of you. So, to my next question, Adiola, having done what you have done, I know that you say you've not had a claim, but can you share from your experience one or two, without mentioning any name, the kind of security or the sense of security that you feel from your clients, the people you have worked with, who have done life insurance through you? What do you sense from them?
Well, that's a nice question. You know, there's always that first sense of relief and peace of mind. That's something that comes instantly with the setting up the policies. Because the moment you set up your policy and it is approved, that amount, the face amount, which is usually a big amount, 500,000, 750,000, $1 million, is available from day one should anything happen. So you know for certain that what's the worst that could happen? Maybe I drop dead now. My family will be okay, right? My income will be replaced. The bank would not take the house. My kids won't have to move to a smaller place. They won't have to let go of their dreams of the university. Like, even if I'm not here, everything else will still work because I'm not there as a person, but I'm still able to give them a gift that keeps giving. So it's just that sense of relief, peace of mind that what's the worst that could happen? I
Yeah.
pass away. Even if I do, my family would be okay and I'm going to be leaving a legacy that outlasts me for generations. So that's security is number one. And then also the fact that they could actually, take advantage of compound interest of the market and build wealth that they could access in their lifetime. That's another cool thing that makes people very excited. Most of my clients are way more interested in the wealth building aspect of the plan. Okay, this is not about only if I die. Oh, I can benefit for it while I'm alive. Oh, I can use this to supplement my retirement. And that's something that also like excites them, that makes them very happy. And we're always happy to meet again and review the numbers to see how it is going in accordance with the plan. So yeah, there's this immediate security and peace of mind that no matter what happens, the families are covered. And then there's the wealth building aspect where they themselves can draw out money from their policies in their own lifetime to live their best life.
Thank you. Thank you so much. That's quite insightful. There was something you mentioned, when we started, and that was when you were talking about you did the life insurance for your family, and there was a way you stressed, and for my children. Now it's the time to actually dwell on that, and it's actually two questions in one. First, you are a very young person, and you've been doing this for about 5 years now. What would you say to people who are young and feel that life insurance is just for people who are old or who are close to dying? That's one. Then, coming to the children, you know, people will always like, why will I be doing life insurance for children? Can you just um, educate us a bit in those with those questions?
All right, thank you very much. That's a very good question. I think the main problem still lies with people thinking life insurance is just for death. and they not realizing that life insurance has evolved over the years into something that is not really just about death anymore. It's now also like an ultimate wealth building machine. If we're looking at it from that perspective, then we'd realize that the earlier we jump on life insurance, the better for us. The best time to get life insurance is when you're young and healthy. Young because you get to lock in the lowest rate possible,
Thank you.
and healthy because you get to lock in your insurability. Not everyone who wants life insurance can get it. And there's no way to guarantee what your health status will be in the next day. All it takes to go from insurable to uninsurable is a call from your doctor to say, in that test you did, we saw something, right? So the best time is when you're young and you are healthy because that's when you can get it. There are people who want, like, I've come across several of my clients who want it, but they're not able to access it because of one health issue or the other.
All
And they've
that.
not always had the health issue. It just came up. Should they have been covered before that came up? Then they would have been covered regardless of what happened after the
Yeah.
coverage, right? So life insurance is not only for those that are older or those that have families. As long as you have life, hair in your lungs, you need life insurance. And the earlier you get on it, the cheaper it is for you. And of course, money compound interest gets to work in your favor because the more time you have, the farther you are away from retirement, the more time your money has to compound and
Yeah.
double in the market, building bigger and bigger cash value for you, which is the money that you can spend in your lifetime. So understanding that it's not just about if I pass away, leaving money for somebody. It's actually something that I could enjoy, I could use. That understanding alone allows you to see the urgency that it's now and not later. Now, for the kids, as far as life insurance for children is concerned, it still ties down to what I just talked about, right? Of course, if life insurance was only for death, why would I want to get a life insurance for a child? I mean, under normal circumstances, they shouldn't die anytime soon, if nothing out of the blues happens. But when you see it as an opportunity to build in wealth for them, that is when it becomes important. I'm looking at my kids. When I started my policy, I was 30 years old. And I'm like, if my dad had come across this and done this for me 30 years before, I should be retired by now. Like, I'm running their numbers with little amounts of money, like $100 monthly. And I'm seeing, six figures, seven figures in their youth before they even turn 65. And I'm like, this is amazing. One thing they have more than us is time. And then you get to lock in that tiny age. When you
Okay.
get life insurance for kids, I do not recommend temporary insurance because that's not the purpose. The reason why I get life insurance for my kids is because of the wealth building opportunity that comes with it. The fact that we can build cash value and I can lock in their insurability for life.
Yeah.
There's a real life story with one of my clients. You know, she has already like gotten a policy, and and when she did ours and that of her husband, I was like, oh, if you still get CCB from the government, apart from RESP, which is the other popular education savings plan for kids,
Yeah.
you can also, set up a life insurance policy for your child. And she was like, oh, life insurance, like, because you can actually use it to build wealth for them. So say your RESP takes care of education needs, right? And they're able to go to school without student loans and all that. What about after school? What next? That's when you get to fall back on this cash value. By that time, it's significant. They can take money out of it. They can start a business of their own. They can buy an investment property. They can, launch in on opportunities just because you've locked it in when they are young. And the cool part of it is that regardless of what happens, you have locked in their insurability for life. And they won't be worrying about life insurance when they are our age. And she was like, okay, that makes a lot of sense. And she locked it in. Few months later, she had another baby. And then she reached out to me and said, you know what? People should not remove my child from the settings. Though. I just had this baby. Let's lock her in as well. And that was how we took the policy for the baby. The baby was just 15 days old. 9 months later, then she called me again. She said, well, she noticed that the baby wasn't like meeting her milestones. She wasn't meeting the milestones. Like she wasn't sitting down yet. She wasn't crawling yet. So she had to get the baby examined. and then they found out that the baby was autistic, right?
Wow.
And so she was like, "So what does this mean for a plan?" So that you don't have any money.
Nothing.
The
Oh
baby is
my
already
God.
at the time that we put in the policy, there was no diagnosis whatsoever. So the baby is fine. We just continue to contribute into the plan as we have started, and the policy is
Wow.
covered. And that's one of the beauties of locking it in early. They get to enjoy passive income, compound interest for the longest time. But most importantly, you get to lock in their insurability that no matter what happens, if anything changes with their health, they are covered for life. So, yeah,
Thank you.
it's absolutely, it's one of the best gifts you can give to your child. Forget about toys, Legos, and fast food. Get a policy for your child and start building wealth for them. You will look
Thank
back
you.
a couple of years and you'll be so proud of yourself.
Thank you so much. That is a two-in-one story that you just got on this session. First, your story and that story of your client. And this just emphasizes the need for early decision. So, well, a lot of us listening to it now, we are adults, we have passed that baby age and all of that. But the best time to still do it is today because you still don't have control over tomorrow. That's a very brilliant one. Thank you so much for that insightful story. I also wanted you to share because I remember on one of our trainings, you had shared about a young lady that you met at the bank. Can you also share that story?
Sure, why not?
Thank
Right.
you.
So, one of the days I was just doing a transaction in the bank, and then I saw this very young lady. She's in her early 20s, and she had come to refinance her mortgage. So that caught my attention. I love having money conversations with people, and I love it when young people are doing very well with their finances. It's an instant attraction for me. So I was like, "Oh, you have a home?" And she was like, "Yeah." She has a home, and she came to refinance her mortgage. I'm like, "Oh." Most because my house is very close to the university. Like most of the young people I've had conversations with at your age talk more about their debts, student loans, the bills, the hours is not enough, and it's always like one negative complaint or the other. Are you able to, have a home? And she was like, well, it's because her father had set up a life insurance policy for her when she was much younger,
My
and that the
God.
moment she became 18, they had accessed money. They took out a loan from a life insurance policy and used it to pay the down payment for the house. And
Wow.
she did buy the house, and it was a three-bedroom, like nice, complete house, and it also had a one-bedroom walkout basement. So what she does now is she lives. She's single. She's young. She doesn't need a lot of space. She lives in a walkout basement, and then rented out the three bedrooms upstairs individually to other students. And she collects rent. That rent helps her to pay the mortgage on the house and also to do other things. So she's like already, and when you get your first house, that's the hardest part. You can leverage from that one
Wow.
property to buy another one, to buy another one, and that's the result
Wow.
of some intentional parent starting out setting up this plan for their child when they were much younger. Yeah, so that's the story
Thank
about
you.
my friend and
Thank
I.
you. Thank you. I like the word you used as you were just rounding up that story now. And that's some intentional parents. And that's what you've been talking about even before now. That's being intentional about our children. And yes, we may not all have been lucky to have heard this maybe before now, but the time you hear is actually also the right time. I mean, see how it's like our parents have set her off, giving her a hedge above her. Well, of course, nobody's competing with anybody, but there's just some things that as young people, she's not having to deal with like people of our of our age group will be dealing with. That's like setting her up for success ahead of time. Thank you so much, Adiola. Now, as we move towards rounding off, please can you just explain and linking to all that we have talked about what this speaks to about legacy?
Yeah, that's a very big question. And for many people, legacy means different things, right? But for me, it's you doing something that would outlive you, something that's bigger than you. right? What I do in terms of investing, in terms of life insurance, I know that long after I'm gone, there are many people who don't know their grandparents because our grandparents didn't do anything remarkable. Anything important. By our kids and grandkids and great grandkids, we know that one Adiola Monofi lived, and she lived a good life and set them up. Like what I'm here to do is to build generational wealth, one that lasts long after I'm gone. Just the way that we keep talking about Martin Luther King and some of the other great men, Nelson Mandela. Yeah, that's what legacy means to me. Where you have something, you built something, you invested in something, and way after you are dead and gone, it still keeps giving, still keeps impacting lives, still keeps helping people. And that also is part of the reason why I do like advisory as well. Because I'm not only setting up my own generation, I'm not only building generational wealth for my lineage, I'm also helping other people to do that for their families, to make sure their
Yeah.
families are protected in the
Yeah.
now and
Yeah.
also to, secure their financial future. So these impacts that we're able to leave, this positive impact that we're able to make in people's life,
Okay.
that is way bigger than us, that would outlive us, is what legacy means to me.
Thank you so much, Adiola. It's been a beautiful time. It's been, so many light bulbs to take from your own personal story and the story of, your journey, your career relating with your clients and being able to share some of the story. I believe a lot of people have takeaway, and the takeaway is not just that you listen to this and it becomes one of those things you listen to and you move on. It should be that when you listen to this, take action. What is that action you're taking next? Just one last word to people listening to us, Adiola.
Um, I would like to, just like you have said, that knowledge is all over the place these days, thanks to the internet. You can look up anything, you can read up anything, you can, get knowledge. I would say when it comes to financial plans, financial products, it's not a shelf product, so it's never a one size fits all.
Fits.
So while we are able to gather knowledge, it is important to sit down with a professional that will take a look at our own individual situation and will be able to set up like a customized plan that suits our own needs, our own goals, and our own budgets.
Yeah.
So don't take financial advice from your neighbor who you don't know the amount of debt they are dealing with. If you're going to be taking financial advice, take it from somebody who is already attaining where you want to be,
Yeah.
or who
Yeah.
has the knowledge, who has the professional insight. Because
Yeah.
I meet with a lot of people who have been, they've missed their roads just because of advisors that don't even know what they're doing. Not like
Exactly.
professional advisors or, you just came into Canada, this is what you should do, that is what you should do, and then you
Yeah.
want to advise
Yeah. Yeah.
if the advice that you're taking, make sure you're taking professional advice and look at the life of the person who is advising you. Is that
Yes.
where you want to be in the future, in the next 5 years, in the next 10 years? Are they living your life, the life you aspire to live? Because if the advice has not changed their life, what makes you think it will change your own life? So
Exactly.
I see a lot of people here just doing things based on what they see on the internet. Sit down, take your time to sit with a professional and let them customize your plan for you. And apart from gathering knowledge too, taking action is very important. Implementation is key. Your
Yes.
fortune is in taking action.
Yes.
Knowledge without implementation is absolutely useless. So when you watch this and you see that it's educative, don't just leave it like that as what other content that you have consumed. You can reach out to Adela Toby, let us set you up, let us look at your situation and come up with a plan and take action. Right. So that's all I have to say
Thank
to
you so much. Thank you. You've heard it all. You've heard it all. So, your next action should be, even if you have something, just are you reviewing? Is it meeting your needs, like Adiola said? let a professional help you look at it. So let's take this conversation to another level. My link is just below, and just jump on my calendar and let's take this further. Thank you so much. Adiola, thank you so much for having this beautiful discussion with me. I believe that a lot of people who are going to be engaging with this session, with this edition, are going away with a lot. If it is nothing, your personal story and the two other stories, because this is what it is about, to actually let people know there's been so much out there about financial tools, life insurance especially, and people don't even know that it's impactful. So when they hear that this is what it's doing for someone, it shows possibility. So do not just hear those possibilities, be a part of that possibility. Thank you, and I'll see you again.